Welcome to CrushTheStreet.com's weekly market wrap-up. After consecutive sessions of record-busting gains, the U.S. equities market finally saw some semblance of a give-back, with the Dow Jones closing down 90 points from the prior trade. The S&P 500 and the Nasdaq also pulled back at a slightly more accelerated pace, no doubt hurting from Oracle's sharp miss on quarterly results. The most recent jobless claims data indicated a small increase in claims filed, although mainstream analysts are interpreting this data from a glass-half-full perspective, noting that the overall trend of jobless claims is going significantly downwards. While that is certainly true from a running average, it does raise a question or two about the sustainability of real growth through the manipulation of paper assets. Speaking of manipulation, the world is abuzz about recent government threats by the nation of Cyprus to essentially steal 10% of its citizenry's savings account to help pay down rising debt levels. Of course, the blogosphere lit up like the 4th of July, and I've been receiving tons of junk mail from precious metal dealers suggesting that we are on the brink of a global cartel takeover and that the only way to protect ourselves is by purchasing physical gold and silver bullion. I'd like to urge some restraint here with this point. The media wants you to believe that the issue is about government bodies stealing from its people. It's not. It's a sophisticated diversion. The real issue is that member states of the European Union gave up their sovereignty, or in this case, their right to decide their economic future through options of their own choosing. Cyprus is at the mercy of Germany, and the fatherland is in no mood to dilute the monetary supply given their lack of any real unemployment. Therefore, you have a foreign interest dictating terms for a country whose values and financial means are often diametrically opposed to each other. The sacrifice of sovereignty is a downfall of a nation, not necessarily their adoption of fiat currencies. Moving forward, European stocks should represent an attractive opportunity. The forecast I gave to premium subscribers of ContangoDown.com was that positive movements for the euro currency will be capped at 134 and that a lot of trading would occur beneath the 130 level. So far, this has been very accurate, which means that there could be a play for undervalued stocks. In the past, I have traded the French oil company Total, or ticker symbol TOT. I prefer fundamentally strong companies that have an international presence, and TOT fits the bill. Because of uncertainties in Europe, a weakening euro currency, and a crude oil market in decline, shares have weathered a lot of bearish sentiment. I am looking for a price per share target of 48 or below to initiate a short-term trade. That's right, I'm talking call options here because I want to control my downside risk at a set level. And I also believe that while an upside from 48 exists, I don't see tremendous gains in the open market. Hence, I would prefer trading derivatives for Total. The biggest risk factor for me is a spot market for crude oil. Looking at the WTI technicals over the past 3 years, the picture is a rather ugly one. We're seeing peak declines annually, which usually suggests one thing: deflation. Or it could mean increased supply, which usually means decreased demand, which usually means, you guessed it, deflation. Look, I know we're big inflationists here, and certainly any sign of overt deflation would inevitably lead to inflationary policies by the Federal Reserve. But for now, I have to call the market for what it is. We're in a deflationary cycle, and the best way to protect yourself is to consider loading up on stocks and assets that were particularly affected by the negative pressure and avoid others that are currently acting irrationally. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.